So stop me if you got a question, and we'll see if we can put something together here. So it says, teacher stars produces stars for elementary teachers to reward their students. Okay. Teacher stars trial balance on June 1 is as follows. So I got the trial balance here, and it shows me all of the accounts that the company has. Notice there's three inventory accounts: raw material, work in process, and finished goods. Okay. And let's see. Then we have these subsidiary balances. Okay. So it's showing me, this is what I'm talking about. For work in process, there's two jobs. Job 120 with a balance of 41,300, and then job 121 that doesn't have a balance. Okay. And then it shows stuff in finished goods, large stars and small stars. Shows the raw material, paper, and then indirect material of 300. Okay, so we're going to need all of this information, but we're going to need to find out what the requirements are. So they got some transactions. Now I don't need to keep the transaction window open because I think at the head of each journal field they repeat. See how A corresponds? But we could scan it real quick just to see what we're going to need to do. Okay, so it looks like we're going to need to do some bookkeeping for this manufacturing outlet. Okay, so the first thing is to journalize those transactions. So we're going to work on one. It said collections on account 145,000. So we know how to do that from 201. We're going to debit cash 145,000 and credit accounts receivable. Simple one that we should know how to do. Okay. Now, B, selling and administrative expenses incurred and paid. We'll just debit selling and administrative expenses, and we'll just pay it with cash. So credit cash. All right. Now it says payments on account. So that means that we're paying off accounts payable. We're going to debit accounts payable and credit cash 40,000. So a little bit of a review from 201 type of stuff. Okay, now it says materials purchased on credit. Paper, which is a direct material, and then indirect materials of 3,800. And it says prepare a single journal entry for this event. So we're going to book a debit to raw materials inventory. Okay. And it's done on account, so we're going to have accounts payable. So I'm going to add them. I got 29,300 when I add the two, right? So they're telling us what the direct and indirect is, but it's all going to go into this raw materials inventory account because it's all raw material. It's only when we start putting it into jobs that it takes the path of direct or indirect. Okay. Now they're telling me materials requisitioned and used in production, and they're telling me what jobs it goes to. Okay. So job 120 is getting $600 worth of paper. Job 121 is getting $7,750 worth of paper, and then indirect materials are 1,000. So we're going to prepare a single journal entry. We got to go work in process. Okay. Now in the subsidiary records, that's where we would define what job it is. But this is like the master account. So we're going to put all of the direct material. So that's all of the paper. That's going to go straight to work in process. So we'll add up the paper amounts. We're going to have 8,350. That's the 600 plus the 7,750. So 8,350. Now, it's being requisitioned, and then the indirect stuff will go to the manufacturing overhead account. Okay? Because we cannot tie it directly to a job. We have to put it into overhead. So that's all going to come out of raw materials, 9,350. If I did the math right. Okay? Looks like that's okay. You see how I did that? Yeah. Okay. Now they're saying wages incurred during June, 42,000. And the labor time records for the month show job 120 at 4,800, job 121 at 16,600, and then indirect labor at 20,600. So it's a matter of breaking it up. The things that went directly to the jobs will go to work in process. So the 4,800 plus the 16,600, so that would be 21,400. Okay, that's direct material, and then direct labor, and then indirect labor is going to go to the overhead account, manufacturing overhead, and that's 20,600. Okay, so I'm going to have 42,000, and that ties out with this. Okay, so that'll be wages payable, 42,000. See if we did the math right. Yep. Okay. So things that go directly to jobs, they're going to be put right into work in process. The indirect stuff has to go to overhead. Okay, now they're throwing in a 201 piece. Wages paid in June include the balance in the wages payable account at May 31st, plus the 4,500 of wages incurred in June. So we need to look at our trial balance. Wages payable on May 31st would be this beginning balance. So May 31st, 1,600. Okay, so wages payable is going to be debited for 1,600 that's sitting there at the end of May. And then it says we're also going to incur another 40,500. So let me think about this. We may have to just lump the two together because that 40,500 may be sitting in this 42,000. Just think about it a minute here. Give it a try. So that would be 42,000. Yeah, it would be, right? It's 40,500. It would be 42,100. If I added the 40,500 and the 1,600 in cash. Okay? We thought about that for a little bit, but just review. They're saying that we're paying off the beginning wages payable balance plus $40,500 worth of the additional wages that had been incurred subsequent to June 1st, and that's part of that is that 42,000 that we booked prior. Okay, so we combine the two and pay that off. Okay, depreciation on plant and equipment, 3,300. That is a overhead. It's going to go into overhead, and we'll have a credit to accumulated depreciation, 3,300. Okay. So far, so good. Okay. Now it says manufacturing overhead was allocated at the predetermined overhead rate of 60% of direct labor costs. So what we have to do is we have to go figure out what our direct labor costs were. And I think we can look at journal entry number, or journal entry letter F, okay? And our direct labor would be the amount that we booked directly to work in process. So that's 21,400. For me, I know you guys have different numbers, but 21,400. And what they're saying is, they're saying that we're going to apply overhead to work in process at 60% of the direct labor costs. So what's going to happen is I'm going to book a debit to work in process and a credit to manufacturing overhead. I'm taking it out of the overhead and putting it into work in process. So that would be this step here from our, right? That's moving it here into work in process. But it's being done at this predetermined rate. Okay, so what I have to do is I have to take the 21,400 in direct labor costs and multiply it by 60%. So that gives me 12,840. That's the amount that we're going to allocate to work in process. Okay? Okay, in letter J it says jobs completed during the month. Job 120, 800,000 large stars at a total cost of 49,580. So what we're going to be doing now is we're going to be moving it. It's going to be right here in this area. Right? We're going to be moving it from work in process to finished goods. Okay? So it's just going to be a debit to finished goods and a credit to work in process at cost, so at 49,580. So it's a debit to finished goods and a credit to work in process. Okay. Question? Oh, makes sense. Yeah. Okay, now we're going to do a sale. So we're going to take care of the sale first. It says begin by recording the revenue from the sales on account. Do not record the expense related to the sale in this journal entry. We will do that in the next step. So we sold job 120 for 100,000 on account. So we'll book a $100,000 debit to accounts receivable and then another $100,000 credit to sales revenue. So we know that from 201, right? Now what we're going to do is we're going to book the cost of goods sold related to job 120. Okay? So see, if you look at J, it tells us the total cost of job 120. It says it was 49,580. When we moved it from work in process to finished goods, we moved the cost of 49,580. So we know that that's the total cost locked in on that job 120. So what we're doing now is we're doing this piece. We're taking it out of finished goods and charging it to cost of goods sold. So that's going to require a debit to cost of goods sold and a credit to finished goods inventory. And I'm going to use that number, 49,580. Okay, now this is what I was working up to, is that over or under applied overhead. Okay, so like I was saying here, if we come back to my little spreadsheet, at the end of the day, right, you're going to have total debits in your overhead account and you're going to have total credits, and there's going to be a difference. right? So we might as well make us a fresh one here, and we'll put in the numbers. So okay, we'll call this is the manufacturing overhead, and we'll put the numbers in this one. Okay, so let's see. We have to go back up and take a look at each instance where we made a booking to overhead. So the first two entries, there's no booking to overhead. And then in item E, we have an overhead charge. So we put $1,000 for indirect material. Item F, we had a $20,600 for indirect labor. Okay. In item H, we charged depreciation of $3,300. Okay. So this is the depreciation. Okay, now in item I, we allocated overhead to work in process. So we took some out of overhead and stuck it into work in process, and that was $12,840. Okay. And then nothing happened after that. Okay, so we can look at this and we can determine whether we over or under applied. So the way we do that is we would add up the debits, add up the credits, and get the difference. And I can just I'm eyeballing it now, and I can tell that I have more debits than credits. So the balance in this account is going to be the sum of these debits minus that $12,840 credit. Now the thing is, ideally you would want this overhead account to zero out or come as close to zero as possible, because you should be applying all of the overhead that you accumulate. But like I was saying, you're accumulating while you're applying, so you never know whether you're going to hit it right on the head of the nail. So in this case, we have a under applied, right? Under applied balance in overhead. I'll just label it that so we can stress the fact that it's okay. So to get rid of this, the simple way, the accounting 202 way, introductory way to do it is to just charge it to cost of goods sold. So we want to wipe this account to zero. That means that we have to credit, right? We're going to have to put a credit in here of $12,060, and the debit is going to go to cost of goods sold. Okay, so the entry is going to look, well, I'll do it right down here. I'll do it right in our My Accounting Lab field. I'm going to debit cost of goods sold, and I'm going to credit manufacturing overhead for $12,060, just like that. And when I end up posting this entry, when I put that $12,060 here, right, then it will zero out my, right, I'll end up with a zero balance, and that's how we dispose of that overhead amount. Okay. So that's how that works, because the allocation, right, this allocation here is estimated. It's based on an estimate. Right, we come up with that predetermined rate. Okay, let's see what it's asking us to do now. Now it looks like it wants us to post those entries that we worked on above. Okay, so it says T accounts for the general ledger, and they give us the T accounts, and it says okay, they've already put in the beginning balances. We don't have to worry about that. Post the journal entries to the T accounts. and then use the transaction letters as references. And then the neat thing I think here is they give us the entries. So we can have this side by side, and we don't have to scroll back up and down, okay? So it's just a matter of, this is the tedious process, but this is where you have to stay focused and keep your attention to detail going. Let's see, selling and administrative expenses. I'm on B. Okay, and then there's a credit to cash. Okay, now I got a debit to accounts payable in C. And a credit to cash. Let's see, I got a raw materials debit. D. And accounts payable credit. Then in E we got a compound entry. So we got work in process of manufacturing overhead of 1,000. Raw materials inventory should be right here, 9,350. Okay. Item F, we're going to do similar dynamic here. We're going to debit work in process, debit overhead, credit wages payable. Okay. G, it's just a debit to wages payable and a credit to cash of the same amount, 42,100. Oops. Okay. H, I got a debit to manufacturing overhead for 3,300 and a credit to accumulated depreciation I got a debit to work in process of 12,840 and a credit to manufacturing overhead of 12,840. J, I got a debit to finished goods of 49,580 and a credit to work in progress 49,580. Two more. K, I got accounts receivable debit 100,000. Oops. Wait, I had it right. And sales revenue and then we got a debit to cost of goods sold of 49,580 and a credit to finished goods 49,580. Okay, and then finally, to get rid of the overhead balance, there's a debit to cost of goods sold of 12,060, item L, and a credit to overhead, item L. Okay, I think we posted correctly. Now it's just a matter of doing some arithmetic. We gotta get the balances in each account, so we should know how to do that. I'll start with cash, 18,000 plus 145. And then we'll subtract the credits, and I got a $53,900 balance. Work our way over to accounts receivable. 175,000 plus another 100,000 minus 145,000. So I end up with a $130,000 balance. We can do raw materials, so the beginning balance of 53 plus the 29,300 added in item D and minus 9,350. I get a 25,250 balance. Some of them we can just drop it down, like plant assets. Nothing happened to that. Go back to work in process. 41,300 plus 8,350 plus 21,400 plus 12,840 minus 49,580. Okay, we're working them pretty fast, so a lot of margin for error. Okay, that one we didn't have to do any math because it's 20,400. That those two 49,580s cancel each other out. Let's see, accumulated depreciation would be 71,300. Accounts payable. Okay, now the credit side is going to have more. So 117,300. Let's see what we got here. Wages payable. $1,500. Some of them are easy, like common stock. You don't have to do any adding. Retained earnings. Sales revenue only has one item. Cost of goods sold will be 51,640. Maybe we double check that. Yep, 51,640. And we'll do the overhead. So go okay, subtract credits from debits, and it should be 0, right? Because we did that entry to wipe it out. Mine, I double checked it, it's 0. And then selling and administrative expenses, we'll just pull that down. There's just one item. Okay. Okay, we must have not posted correctly. See, that's the problem with going so fast. One or more of the balances are incorrect. You have posted an incorrect amount and are, okay. So we're not, I don't want to say we're in the worst situation possible, but it's going to require a little bit of a double check here. So it's not too specific on what we did wrong. Let's go back and eyeball it. A 145, accounts receivable 145A, B 27 to selling and administrative debit, and B 27 to cash. Okay. C, accounts payable debit 40,000. C, right? Cash credit 40,000. C. Let's see what else we got. D, raw materials debit 29,300. D, okay. And accounts payable credit 29,300. D. E, work in process debit 8,350. E, manufacturing overhead debit 1,000. E, raw materials credit 9,350. E, okay. F, work in process 21,400. Okay. Manufacturing overhead 20,600. F, okay. Wages payable 42,000. Credit. F, okay. G, wages payable 42,100. Cash 42,100. G, okay. H, manufacturing overhead 3,300. Accumulated depreciation 3,300. H, okay. I, work in process 12,840. I, 12,840. And manufacturing overhead 12,840 credit. I, okay. Finished goods 49,580. J, work in process 49,580. J, okay, we're getting close. Accounts receivable debit 100,000. Okay. Sales revenue credit 100,000. Okay. Cost of goods sold debit 49,580. Okay. Finished goods credit 49,580. Okay. And finally, cost of goods sold debit 12,060. That's L. And overhead credit 12,060. So it looks like we posted them correctly. Looks like we labeled them correctly, unless we're overlooking something, which might be easy to do. And that's one reason to do the problem slow, right? Because then we don't have to jam ourselves up going back. I'm going to pick some of the bigger ones. Let's see. Say cash. Okay, cash looks okay. Accounts receivable looks okay. Raw materials inventory looks okay. This one we might have an error. And the ones with more transactions, it's more chance for error. So let's do work in process. $34,310. That one looks fine. 270 looks fine. Let's see here. 71,300. $117,300. $1,500. 142 balance. 19400. 100. Okay, let's see. Oh, here it is. You see it, Whitney? I put in a 5, it should have been a 6 here. So it should have been 61. So maybe we'll just check the others just to be sure. Okay, that wipes out. That's 27. I think we fixed it. Okay, so one little error can cause a little extra work. It's kind of up to you whether you want to go back and trace your journal entries first when you're correcting, or if you want to check your balances first. And it wasn't too specific. Okay. Let's see here. Post the transactions to the raw materials inventory subsidiary ledger accounts. Key each transaction by transaction letter and calculate the ending balance of each account. Okay. So we got to go back and look at what happened when they bought paper, right? In that first transaction where material was bought, they bought 25,500 in paper and 3,800 in indirect material. So this is where we might want to have these open. Okay. So we're going to put 25,500 from item D to paper, and we're going to put 3,800 from item D to indirect material. And now, materials are requisitioned and used in production. So, direct material is what went straight to the job. So that's the paper. So that's going to be the 600 plus the 7,750. So that's 8,350. It's coming out of paper. So this is going to be item E. And then 1,000 is coming out of indirect material. And then it looks like nothing else happened to those raw materials. So I'm going to take a balance. And get the balance in those subsidiary accounts. Then we'll do the indirect material. Check that guy. Okay. So that's just looking at the raw material. Now they want me to look at it by job. Okay. So we'll keep our transaction information up over here. And the first time materials are put to a job is in item E, right? And job 120 gets 600 of direct material. And And job 121 gets 7,750. Now they got direct labor happening in item F, so it says job 120 got 4,800 of direct labor, and job 121 got 16,600. Now, we have to allocate the overhead by job. So remember, overhead is allocated at 60% of direct labor. So for each job, I'm going to take the item F figure. So for job 120, it's 4,800 and multiply by 0.6. And that's the amount of overhead allocated. So it says that's going to be item I. And then for job 121, I'm going to take 16,600, which is the direct labor from item F, and multiply by 0.6. So 9,960 is allocated. Okay, now we have to be careful because it's only job 120 that's completed. So we're going to take job 120, and that's going to be moved out of work in process in item J. Job 121 is not complete, so it's not moved out. So now we'll take balances. We'll start with job 120. And of course that zeroes out. I added up the debits and it equals this credit. So the balance is going to be 0. Job 121 is still in process. So we can add up the amounts in the debit column. $34,310. Now we've got to figure out this thing about stars, right? We're going to think now. Post the transactions to the finished goods inventory subsidiary ledger account. Key each transaction by transaction letter and calculate the ending balance of each account. Okay, so let's see. Large stars and small stars. So completed, jobs completed during the month. Job 120 was 800,000 large stars at a total cost of 49,580. So 49,580. And I'm going to go with item J. Now this job sold, so all of job 120 was 49,580 sold in item K. And that's the large stars. Now let's try to see if there's anything to do with small stars. Did they make any mention of small stars? You don't see any mention, so it looks like the balance for small stars will be the same as it was when it started. So we're going to have a, right, the 49,580 cancels each other out. We'll give it a shot. Yeah. Okay. So really just the large stars changed. Okay. Let's see. Now they want a trial balance. Okay, and hopefully they give us a link to the ledger, and they do. So it's just a matter of putting together this trial balance. We'll take the cash balance, we'll take the balance from each account. Accounts receivable is, and then we'll go raw materials, work in process, finished goods. We got plant assets. They're kind of an accounting 201 drill. But it keeps you sharp. Wages payable, common stock, retained earnings, sales revenue, and cost of goods sold. Manufacturing overhead is 0. Selling and administrative expenses are 27,000. Then we add them up, and don't proceed if you don't balance, right? So let's make sure we balance. Let's get this where we can see it. Okay, I'll start with the debit column. That's 622,500. Then I'll do the credit column. And I got the same number, so I'm pretty confident that oh goodness, I got overconfident. I have the same number, but I got an error. Maybe it doesn't want that 0 in there. You know that? What else could I have not done? Cash. I'm adding up, so I know I'm pretty. Just eyeballing it. Sometimes we line them up in the wrong.
Yeah, I think that was just the 0.
It was a 0, okay. It doesn't want that 0 in there. Ah. Okay. Now it wants me to make a cost of goods manufactured schedule. So we can take we got our work in process account. So we're going to start with beginning work in process of 41,300. Then we're going to add the direct materials used, which is item E. If you were to look back up at the journal entry, you'd see an item E. That's the direct material going in. Okay. Item F is the direct labor. Item I is the manufacturing overhead. Okay. So we'll go direct labor from item F. And we're going to have manufacturing overhead, and they want us to break it down. So we're going to have we had 3 things that I can recall, but we might want to look at the journal entries. So that first charge to overhead was here. That's the indirect material of $1,000. Okay, and then indirect labor 2,600. So we'll do those first two. Indirect material, indirect labor. So 1,000 and then 2,600. Okay. And then let's see what else we have there. I think it was that depreciation charge. Here, depreciation of 3,300. That's my depreciation. Okay, so we'll add those up and get a subtotal. So we'll have 24,900. That's going to be my total manufacturing overhead. So if I add the 3, direct material, direct labor, and overhead, I'll have my total manufacturing cost incurred during the month. So we'll tally those up. Oops. So we'll go 8,350 plus 21,400 plus 24,900. Now if I add my beginning work in process and my total manufacturing costs incurred during the month, I'm going to have what we call the total manufacturing cost to account for. So that would be 95,950. And then the secret here is to subtract your ending work in process inventory. So my ending work in process inventory is 34,310. And if I subtract that from the 95,950, I get to my cost of goods sold, cost of goods manufactured, 61,640. Scroll back up. It put that in negatives for me, but it didn't require me to input it as a negative. But it is a subtraction. Okay.
Which one do you subtract?
The ending work in process. You subtract it from the total manufacturing cost to account for. Now it wants a income statement, so we'll do sales revenue, and that's going to be from my sales figure from my trial balance. So my sales figure is 100,000. Okay. And then we're going to figure out cost of goods sold. So we start with beginning finished goods inventory, which is, where do we put that? Beginning finished goods. I think it's right up here in our we could actually look at our balances here, right? And the beginning finished goods was 20,400. Then we're going to add my cost of goods manufactured, which we did in the previous step. So I'll take this 61,640 and add it. So that's going to be my cost of goods available for sale, 82,000. I'm sorry, 82,040, right? Yeah. Okay. Now we're going to subtract our ending finished goods inventory. So that's this. That's what's sitting on the trial balance. So this time I'll put it in parentheses. 20,400. And when we do that, we get, wait, funny how our beginning and ending finished goods is the same amount. Let's double check that. Yeah, 20,400, same amount. So it's going to back us right back down to that 61,640. So our cost of goods sold will be 61,640. If we subtract our cost of goods sold from our revenue, that'll give us our gross profit. So 38,360 gross profit. Then we're going to subtract the selling and administrative expenses, which are 27,000. Okay, so that's going to give me 11,360 net income. And we're going to go ahead and check. We got excellent.